Welcome back to the channel where we use the strong arm indicator to strong arm these markets. Let's check out a trade we took on Friday in the Japanese yen. This is a swing trade in the Forex futures. Alright, so as you can see, there was some trading activity here, ranging activity. We avoid these areas. Market broke above that area here, created a level. We did go long here, knowing that this push up should break through all this so-called resistance here. All right, it's bouncing off these areas here. Okay, most people call that resistance. We don't use those type of resistance levels, but we understand that most traders do, and we take advantage of that. We do the opposite. Alright, so strong arm indicator fired off here. It was after hours, and we took that trade, knowing that this ranging activity, right, is most likely not going to stop this push up. Alright, because it played in this area for quite some time. Alright, so it pushed up here, boom, we took that trade. We also took this trade here, so the market dropped here, created a level with a strong arm indicator fired off. Alright, this was a day trading opportunity. We got in for a short scalp downward. Alright, we went to a smaller time frame and caught a bounce back up into this level and took the short, a quick one. Alright, so the following week on Tuesday, we went short again. Alright, we used that level for it to return for a swing trade, and we went short here. We got out here. Alright, we went down to a smaller time frame and got out before all this trading activity here. Alright, so the market was going sideways here. We didn't take this trade. This is too much trading activity. We avoid that area. So we played other markets during this time. This was just a pivot low. This is not a wholesale level. We would never use that. Alright, so here, this is the area we did go short. Alright, the market created a nice level here. Alright, when the strong arm indicator pushes up and then pushes right back down, with the push down engulfing this whole area, this ranging area, that creates a beautiful level, alright, that we extend outward. So we knew that our target at this point, because it already visited this low before, alright, so this drop, we knew we'll at least get down to here, but our target was actually down here, where there was a wholesale level to buy to go long. Alright, so we took that drop all the way down for a beautiful swing trade. Alright, and that's a major move in the Japanese yen, as you can see. During the non-farm payroll on Friday, it came back down to this level, and we went long. Alright, we went long 7 contracts here. We got out in this before this ranging area, right here. Boom, we got out. We kept some floaters. Alright, our 2 floaters are at break even, and we're looking to target this area with those 2 floaters. But if it does come back down to break even, we're cool with that, because we already made our money in this drop down, alright, and this push up. Alright, so we caught this push up, we caught this quick drop here, we caught this major drop here, and we caught this long here, and we have 2 floaters looking to revisit this area. Alright, so this is how you utilize the strong arm indicator to strong arm these markets. There's not too many people out there that strong arm these markets the way we do over here. Alright, let's get it.